Hey, how's it going, guys? My name is Dan Wynn. I'd like to welcome you to another episode of my Financial Freedom Journal. Today's topic is going to be real estate investing with the VA loan for military veterans. Before I begin, I'd like to say thank you to everyone who has liked, commented, shared, and subscribed. Anyone who's reached out to me and I've had phone conversation with, I really do appreciate that. That kind of fuels the fire. It kind of gets me more motivated, amped up to do more stuff. So really do appreciate that. If you like the content that I'm putting out, please do like, comment, share, and subscribe. I'm sure there's other people out there that could benefit from the information. So just to give you the rundown of what I'm going to be covering today is one, why it's important. Two, what is the takeaway from all this? Three, the advantages of the VA loan, just a few advantages. And then four, prep work. And lastly, I'm just going to give you two really simple, easy real estate investment strategies that you can use with the VA loan to help grow and build wealth and attain financial freedom for yourself. But before I get into all of this, I'm sure you guys have all heard of that person, whether it be a senior NCO, senior warrant officer, or senior officer who has served their country for 20 years. They did the time, they got out, they got half of their base pay, and they also are looking at, some disability as well. But at the end of the day, it still doesn't cover their current lifestyle. It still doesn't pay all the bills, let alone, do what you would like to do. So what are they forced to do? While they're in that transition period, usually they're scrambling, trying to find some job. They are, or they get out and they don't have a job, and now they're looking for a job, something to supplement their retirement because it doesn't cover all of the bills. So, and by the way, one, you're likely not going to be making as much money as you did while you were in the military as you will in the civilian sector. Two, you're more than likely going to be subordinate to someone that's half your age. You may get a middle management position, but more than likely you're going to be working for somebody that's probably half your age. And three, a lot of times it is a huge culture shock for someone who's done 20 years in the military. They've worked their entire career to get this rank, that now they go into a new environment where their rank doesn't mean shit, because it doesn't mean anything to anybody outside of the military world. A lot of times, like I said, that could be a culture shock to a lot of military soldiers, whether it be officers, warrant officers, or NCOs. So now let's say you do take that job, or let's just say you find a great job that you love that's making comparable pay to what you were, and you can sustain your living. You're still tied to a 40-hour-a-week job. You're still tied to another job that you're now going to have to work from whatever time you retire. Let's say you're 40 years old when you retire to 65 years old to tap into your TSP 401k or to get a retirement from whatever new job that you have. So you're retiring, you're going right into another job where you do not have autonomy over your life. You are tied to something else. That is an option if you like to do that. That's great, but I would like to present another way of going about it. And that's where all this comes into play. And that leads me right into number one. Why is this important? This is important because this is securing your financial freedom. This is about you gaining autonomy over your life. You not being tied to a 40-hour job. You being able to collect passive income to where you can go out and really truly live life the way you want to, and not wait until you're 65 when you're old and decrepit and you can't really go out and explore and do the things that you like to. So that's what this is all about: autonomy over your life, having the ability to go out and do what you like to, help others. I want to be a wrestling coach. That's why I'm doing this. When I retire, hopefully at 40, and I have all my finances together. My plan is actually at 35, but let's say 40. I want to go be a wrestling coach, and that's the way I want to give back. That's the way that's what's going to be fulfilling to me. And I would like for you guys to go, anyone out there listening, to find what is going to be fulfilling to them. So what's the takeaway? I got a couple of them. What I want you to walk away with is, I want you to walk away knowing that you can build personal wealth while you are serving your country at the same time. You can retire at a relatively early age and live off of your retirement plus disability plus the passive income that you're making, and that will sustain your current lifestyle, whatever lifestyle you have at that moment, without having to go out and continue to trade your time for money, basically going out and seeking another job. You can truly retire and do something that's personally fulfilling for yourself. At the same time, you can be, kind of building generational wealth for your family. Real estate you can continue to pass down to your kids, and they can pass that down to their kids, and it just keeps going on and on and on. One thing you can't pass down to your kids is your rank, right? So that's what I want you to take away from this. Really think about where you're at. Start a personal dialogue with yourself, or a dialogue with your significant other. See where you're at right now, where you want to get to, and do backwards planning and really map this thing out, because I truly believe that anyone can build and grow wealth. And you can especially do that, like I said, with using the VA loan. This is a tool that can help you do that. All right, so 3, the advantages of the VA loan. There's several advantages of using the VA loan. I'm just going to cover a few of them. One is leverage. All right, so leveraging and basically putting 0% down. When you use a VA loan, you don't have to put any money down. That significantly increases your cash on cash return when we're talking about when I go into these strategies, you'll see what I'm talking about. 2, you can use it multiple times. Just gonna put multiple use. I'll put multi-use. There you go. All right, you can use the VA loan multiple times. Contrary to most people's belief, you can use the VA loan multiple times. I've done it myself, and you can have 2 properties under the same VA loan. The threshold for like the maximum amount VA-backed loan in most cities is like $414,000 and $414,100, somewhere around there. It changes every now and again, but that's typically what it is. So another advantage to the VA loan is it works for any residential property, right? So a residential property is 1 unit, 2 unit, 3 unit, or 4 units. So up to 4 units. So you can get a quadplex with a VA loan. And again, most people tell you, oh, well, you can't do that. They've never done it before. I've done it, So I know for a fact that you can get a 4-unit property with a VA loan. All right, so these are 3 quick advantages of the VA loan. All right, so prep work. I'm just going to give a couple of notes about this. I'm not going to really write anything down about this piece, but what I want to touch on is before you buy the home, whatever home you're going to buy, and I'll go over different strategies here, but regardless of what home you buy, you need to look at the rental, the rental history, what homes are renting for in that area of similar type and size. And you also need to look at what homes are selling for similar types and highs. Basically your CMA, your comparative market analysis. And that's going to help drive your decision. So that the reason why I say that is there are a lot of accidental investors. You hear about them all the time. I'm sure you guys have heard about it. Oh yeah, I own this property. I bought it and bought this property and I moved our PCS to somewhere else, and that it's a really, really nice property in a really nice area. My mortgage is $2,300, but I can only get $1,900 in rent, so I got to pay $400 a month. $400 a month just to cover the mortgage. And oh, by the way, that doesn't include if there's any vacancies, if there's any expenses, if I have a property manager taking care of the property. So, I'm shelling out all this money. That's not an investment, nor is that person an investor. That person did not deliberately analyze that deal to ensure that he was going to make money on the back end. So it's not an investment, and that person is not an investor. And I'm sure you guys have seen this happen all the time. So that when I say prep work, this is what I'm trying to prevent happening to you. I don't want you to fall in that same situation. So just do your prep work. If you go back and look at one of my other videos, I do a really long video about the B portion of the BRRRR strategy. Just look it up in my other YouTube videos, and I give a very, very in-depth, detailed way of how you can analyze deals and certain tools and tricks that I actually use to analyze some of the properties that I've bought. So going over 2 really simple real estate investment strategies that you can use with the VA loan. The first of which is the live and flip. All right. So the live and flip, this is how it works. I did this in my first property at PCS, bought a house immediately. First I did my prep work. I analyzed the deal first, looked at the rental market, compared to my mortgage. Looked at what my cash flow would be if I rented out, and then also looked at what my gain would be if I actually sold the property. So bought a decent house, passed inspection, but I knew that I could make simple upgrades to it, basically cosmetic upgrades to it that would significantly increase the value of the home. So I did that while I was living there, and when I went to PCS from that duty station, I put it up for rent and I also put it up for sale. It made for a great rental. I still would have cash flowed about $150 a month, and someone else would have been paying my mortgage off, and that's including calculated expenses to include vacancies and property management and any small repairs. So again, you can go back and look at one of my other videos and where I talk about the expenses. I think it's the same video, the burst strategy video. Yeah, that's an example of the live and flip. A few things that you want to a few things that you need to know is in order to do this, you need to intend to live in the property for at least 1 year. Most people, like myself included, chose to live in the property for 2 years because I could avoid capital gains tax at that time. If you only live in the property one time for less than 1 year, or for less than 2 years, then you have to pay significant, taxes on the gains that you make for selling the home. But if you live in it for 2 years, if you occupy it for 2 years, you don't have to do that. You can nix the capital gains tax. So that's the way I went. All right. So the last strategy I'm going to cover is the multifamily strategy. All right. And what that is basically you getting a duplex, triplex, or a quadplex with a VA loan, and you're going to rent out the other units that you're not living in. You have to live in one unit, then you can rent out the other units for cash flow, basically, or for them to pay off your mortgage. So I'm giving you an example of how this works out, basically exactly what I've done. All right, so you find a quadplex, right? Let's say this quadplex is $250,000, right? Your income, each unit, is renting out for $700 a month. So your income is going to be $2,100 a month. Remember, you are living in one unit, so you can only rent out 3. 7 times 3 is $2,100, right? Your debt service, or your mortgage, your PITI, your principal, interest, tax, and insurance, is going to be roughly $1,500 a month. And then you got to account for your expenses. Some of the expenses that you want to include are your property management, roughly 10%. Your vacancies, you always want to account for vacancies to basically have some cushion in case of any turnovers or any eviction that you might have. That kind of all falls under the vacancy category. So 10% for vacancies, and then also 5% for any miscellaneous repairs that you might have to account for throughout the month, i.e. a toilet breaking or something like that. All right, so about 25% of your income needs to go into expenses. So 25% of $2,100, $525, right? Add all these up, that's going to give you your cash flow. With this property, you're only going to cash flow about $75 a month. That seems like crap, right? Doesn't really seem that great. However, you have to remember that you are living in one of these units. These other 3 units are paying your mortgage, so you get to pocket all your BAH. So that's got to be at least about $1,000. I mean, if you're able to live off post, more than likely you're probably an E5 or above, and your BAH is at least $1,000, I'm sure, in most cities, right? So I mean, you're pocketing all of your BAH. You could save that, and on top of that, you're cash flowing roughly $75 a month, right? Then when you go to move out after 2 years, you're going to be cash flowing a lot more, probably, I don't know, $400 or $500. You can do the math. Go back to one of my other videos, and it'll show you a breakdown of really in-depth detail of how you can calculate. So what I'm going to do is I'm just going to make a quick chart illustrating how deals like this, using the VA loan, can add to your net worth, can help you build wealth. All right? Just going to draw a simple chart here, simple graph. The bottom represents time. The left side represents the debt you have on your property, right? So we said $250,000 is what we bought the place for. Put that there. That is your $250,000 line. That's how much you owe at this current time, right? Let's put 0, let's put the 15-year mark, and we'll put the 30-year mark. So we know that over time, the debt on your home will be paid off by your tenants until it eventually reaches 0. So you have a 30-year fixed rate mortgage. At the end of 30 years, the life of that mortgage, you will have 0 debt. Correct, right? So over time, also, your home will increase in value. Right? Now let's just use a conservative number and say that we're just going to go with the 15-year mark. In a 15-year period, right, of you owning this home, your home only increases $10,000. I would say that's a very conservative number. So we say your home is now worth $260,000, but your tenants have paid down the debt you owe on this house to $160,000. I just looked at a simple amortization schedule and looked at the 15-year mark for what a $250,000 home would be at the 15-year period with a 5.25% interest rate. It's roughly $160,000. So that right there, that difference there is the equity that you have in the home. That is added to your net worth, right? So that difference there is $100,000. So it's $100,000 worth of equity that you have in your home through one deal. There's several ways to access this equity. You can do a HELOC, a home equity line of credit. You could refinance, or you could just sell the place and have access to that capital. What can we do with that as veterans? We could send our kids to college with that. We could start another business. We could buy more properties to do the same thing. The possibilities are endless. What we could do with that money in just a 15-year period of time. And that's my spiel. So if you like what you're hearing, if you like the content that I'm putting out, please like, comment, share, and subscribe. I really appreciate that. Please send this video out to any other veterans that are thinking about investing in real estate. If you have any questions, please give me a call, write me an email, or just get in contact with me. I love to talk real estate. And with that, that's all I got. Actually, one last thing, I'd like to give a shout out to a few of a lot of senior NCOs and officers that I have spoken with about creating this particular video. I've had a lot of family members and very close friends give me some very good information on what I can do to help improve this video, or what I should add into it as well. So, and these are other veteran investors as well who are active duty or retired, and they see the power of real estate, and they're actually out there taking action and working their way to financial freedom and building their own wealth as well. So with that, that's all I got. Dan Wynn signing out.